Hey traders, happy Monday. Welcome to the Weekly Outlook. This is Chris Pulver here talking about all things stocks, Forex, cryptos. If you recognize the silhouette, it is from Mission Impossible, and some interesting news over the weekend is it looks like Tom Cruise is officially the winner of Hollywood. Why is that the case? Well, it turns out over the weekend, Tom Cruise is apparently working with NASA and SpaceX to film his next movie, or a movie, from the International Space Station. So just like with trading, if you choose to accept it, look, sometimes things are not what they seem. We're going to talk about a lot of currency pairs today, a lot of stocks today. Why on earth is the stock market going up? Everybody's wondering. I'm wondering, why aren't the Japanese yen pairs getting stronger? I'm wondering. The Japanese yen continues to be my least favorite currency pair. We'll continue to make good decisions. We'll take a look at everything, find some direction for the week, and let's go. Thought this was a very interesting chart. One of my traders, Michael R., shared this with me last week, or mentioned the idea in my trading room. The S&P with Amazon and the S&P without Amazon. Interesting. What is keeping these stocks propped up? We know that Amazon has made new highs, certainly during the coronavirus. We had a very sharp V bottom in Amazon. While most stocks from the lows came back to try to retest those, Amazon has not. Netflix did the same thing. So it was weird to see Amazon, have new highs. Granted, they are one of the, kind of more essential businesses that you can still get everything you want from Amazon. So I'm not blaming them. It's just they are so big that it becomes a question of who is going to fail because of Amazon's success. And it seems like a lot. I mean, you've got major retailers filing for bankruptcies. So anyway, look, I still look at the same scenario. I have a Japanese yen prediction that I still think is going to come together. I'm going to talk about those JPY pairs today in this week's video. And even if we are wrong in the near term, I think give it, the time to confirm and just ride these trades out. I think we're going to be fine. So again, I'm trading small. I'm letting the robot do some of the work. I did take some losses this morning on the Japanese yen pairs. We had non-farm payroll last week for the U.S., and it was not good. But as the markets get underway this morning, futures is in the red. U.S. markets likely opening bearish, but again, not to be derailed. So let me take a look at those daily charts. I had some really clear levels, and here's my approach on the Japanese yen. Look, we have a monthly pivot at 107.60. Clearly, price is trying to hit it. All right. Now, the question is, will we hit that monthly pivot and then continue to fall lower from there? And this is just going to be a very low and slow grind to the downside until we get into these 102, 101 levels before we find some major buyers. But in the short term, look, if this is down score a point, pull back, down score a point, pull back, down score a point, pull back, that is different structure. Okay, I may not have a robot that's going to do that unless I'm on a smaller time frame. So for my deployment last week, I was looking for this to get below 107, and it did. We got below 107, we pulled back, we went down towards 105.50, 105.60, but we have pulled back all the way up towards 107 and change. So now that we're above 107, right now in the Japanese yen pair, I'm not as interested in this currency pair. I still want to see price getting below 107, or I want to be able to identify the structure like this where we have a channel that we can see some resistance at this monthly pivot, and then this week in the short term, we look at taking some trades on smaller time frames. If we have the 30-minute chart confirming, the 15-minute chart confirming, then we can look at participating once again to the downside and see how the structure plays out. Again, this might be a resistance point at the monthly pivot that's around 107.60, and if we fall down to score a point for those bears, I would be taking profit because we might pull back, score another point, pull back, score another point. We've seen the yens do this. Look, they did this all of 2019 until we had the big move here in March of 2020. So they are known to have some of these range-bound tendencies, and if that's the case, we need to go to smaller time frames. Same thing is true on the euro yen. Euro yen needed to break below 116, which you can see that it has done that. We broke below 116, went all the way down to 114.50, but here we are pulling back all the way to 116 once again. So what needs to happen? This support needs to hold. If we are not holding and price is closing higher, I don't want to be stuck selling these lows. So it is above this level that I'm getting stopped out, which is fine. My trade size is small. It's a fraction of 1%, just like with any other trade. It's just a trade. So with price coming back above 11600, I am less interested in holding my positions. My stops are already in place for my robot. So like I said, I'll let the robot take it on the chin and then look for confirmation to sell once again. Pound yen. Pound yen is still hanging in there. Pound yen, if we stay below 132, you can see right now that price is at 132.66. That's not below 132. So all of my yen pairs are on a very tight leash. Traders that have been with me know that. This is the type of currency pair that you can be right and you can make a ton of profit, and you can be wrong and you can be upside down for months and months and months. So the last thing I want to do is, call a certain direction, call a position, and then have it go against us. So if you are looking to position trade, as long as price is, indecisive around 132 or does not break above this 136 resistance, then this is just some noise, but we should proceed lower. That's if you're trading the area. I am looking for a robot on smaller time frames to try to get action below 132 and stay bearish, but we need more confirmation now because price is not cooperating. As I said with the news last week, let me go into the calendar. So let's go to Forex Factory from last week. We had non-farm, payroll, and CAD news. Let's go last week and Friday. So Friday, the job numbers were all in the green, but don't let those numbers fool you. We forecasted negative 22 million jobs, and we came in with 20.5 million in the negative. We had a negative revision. We had average hourly earnings way up compared to forecast, but remember, this was probably the short-term bump for everyone that was actually working during the coronavirus, or you had the people that were working were just making more money. So a lot of people were laid off. Obviously, unemployment claims are at record highs. Unemployment rate, we projected 16%, came in 14.7. We had it down to 3.5%. So just because this is better than forecasted does not mean this is a rosy picture of the U.S. economy. These are not good numbers. Okay, same thing with Canada. They forecasted 4 million jobs. They came in with just shy of negative 2 million. So it's not good, right? But somehow the market is always right, and somehow price is doing what it's doing, which right now for today, this is the currency strength chart for the day. The dollar is strong. The Swiss and the euro also strong. The yen, very weak to start off trading. This was 5 p.m. Sunday when brokers open back up and early Australia session kicks in and Asia session. You see that the Japanese yen got much, much weaker. So we have a cluster here at the bottoms. We have the Japanese yen, the New Zealand, the Aussie, the pound, getting back to baseline. But the yen just not cooperating. That's all there is to it. So do I have a prediction on this yen? Yes, I do. Am I interested in where the yen can go? Yes, I am. However, if it's not cooperating, I'm going to be a disciplined trader. I'm going to have to take some near-term losses, and it looks like if it's not going to be in the sell zones for me, I don't want to be in that forced trade. So Aussie yen, it better hold this resistance. CAD yen, equal highs or nice little support becoming resistance. I mean, we have 77.50 to 79.50 looking for major resistance and turns. Euro yen, we should be holding below 116. So, if we end up pulling back into here, that's fine. I'd look for equal highs. We have kind of a 50-50 trade from there, but I'm going to switch this down to a shorter time frame. I'm still looking for 15-minute confirmation. I'm looking for 1 hour direction, and I will take trades still to participate. But if my daily level at 116 is not cooperating, then I'm looking to sell it higher with confirmation. So what will happen is this. If I get stopped out on some of my robots, which I did get stopped out on euro yen and pound yen this morning, my dollar yen is still running. But if I get stopped out on those currency pairs, I'm going to keep them running, but I'm going to switch the parameters so it's not requiring the daily levels, but rather just getting active on a 15-minute chart using 1 hour direction. So I'll explain that in a little bit, and everyone, of course, in my trading room will go through that in detail on Tuesday during our first session. Here's the pound yen looking for that head and shoulders. Actually, this is a crown pattern. So this low to this low, left tip, center tip, right tip. Expecting this 132 level to hold and want to fall down towards the lows at 124. But it's not, right? We're getting noisy at this break. So we break, we pull back above 132. As long as we don't take out these highs, this is still a valid pattern. But if it chops around in here, I just don't know if we have to deal with more consolidation heading into summer. I'm not sure. But like I said, my patience level with Japanese yen pairs, I'm a patient trader, but like I said, Japanese yen pairs, I have them on a tight leash because if you're wrong on yen pairs, they can run way against you. So I always want to plan my Japanese yen pairs with confirmation and stop areas. And I hate taking losses. Believe me, I friggin' hate losses. But this is the one pair that you're going to save yourself a lot of time, a lot of stress, and a lot of money by just acknowledging when the trade is not valid and it's invalid, it's not worth holding on to. There are definitely other currency pairs and other trades out there. Not to mention stocks. If we talk about the stocks for a moment, let's go into this. So 116.50 on the euro yen, that pocket was hit. Let's look at the SPY. Okay, look at what we're dealing with on the S&P 500. Indecision. All right, so all this little near-term movement on the Japanese yen pair, I still think this is indecision like crazy on the S&P. We're not climbing to new highs. We're not making new lows. There's just literally no confirmation. Okay, our VIX is not going higher. The VIX is down to 30. All right, the VIX is not gaining, which means we have little to no volatility in the Forex market right now. We have little to no volatility in stocks outside of earnings, and a lot of that's pre and post market. But the stock market as an index, the S&P 500, the SPY, not going anywhere. So right now, maybe the best thing to do is very little. Maybe me forcing trades on Japanese yen pairs and risk on, risk off type trades. This is a risk off environment. That's what I'm looking for. But I need confirmation. So at the very least right now, we're more than likely dealing with some sideways movement. So I wouldn't be surprised if this week there's next to nothing. Let's see if we have any major catalyst for the news this week. Let's go to the calendar. Let's go to high impact for this week and see what's standing out on the calendar. Do we have anything major? We have, for this week of trading, we have a lighter calendar. We have an RBNZ rate decision expecting the same at 0.25%. We have US CPI numbers on Tuesday. No major high impact news on Monday. Powell speaks at 9 a.m. on the 13th. Current economic issues. Let's see. Peterson Institute International Economics audience. Okay, so that's a panel. Employment numbers for Australia, again, projecting pretty big losses compared to average. Look at what the average numbers are. Positive 40,000, positive 28,000, positive 13,000, projecting negative 550,000. So this impact is global, all right? But yet it's not being reflected in stocks. So as if the market is saying, you know what? We believe there's a recovery. So they're just refusing to go down. Keep in mind, by the way, that all of this bullishness has been created with very light volume. So a light volume stock market is still going to be drifting. A light volume stock market will probably refuse to go down. But it's when we see this indecision all of a sudden give us another, aggressive close bearish, another scary day in the stock market. That could be what starts to ignite the next sell-off. So we will be watching very closely, and I recommend that you're doing the same. Obviously trading involves risk, so don't do anything crazy. Keep the trade size nice and small. Keep it conservative. But the reality is, if we're lacking confirmation, all we're doing here is forcing trades. So how's the best way to trade this? If we have indecision, then I will look to trade the instruments that are either range bound. I will basically be sitting on my hands before I buy any stocks. I'm really not interested, 20 to 30% off the lows buying right now. In my opinion, after still an 11-year run, 11-year highs, I don't believe that we're making a higher high without some type of, volatility ahead. One interesting article last week that I shared with my trading room, and feel free to take a look at this. It is, you can't have a sucker's rally without foolish buyers. And it just creates a pretty compelling case on where we're at. A 35% rally off of the March lows. And again, this is an opinion, but one of the biggest suckers rallies we've ever seen in the U.S. market. So my plan on buying stocks is to wait. I am not buying at this level. I have made some short-term gains from the dips in March. I did enjoy some of this ridiculous recovery. But there's still a lot of great stocks that I'm waiting to see, will they come back to March lows? And if they do, and if we potentially contract and go lower, I'm going to buy lower. So one thing that this talks about is the Nikkei 225. This is amazing. In fact, I did not know this. Look at the rally that we've seen in the Nikkei 225. That's a major Japanese index from 1950 to 1990. But the path in which Japan has followed, the path in which the Bank of Japan has followed, we have been in a 30-year sideways market for the Nikkei 225. And I understand that the U.S. is not Japan. I understand that the U.S. markets and indices are not the Nikkei 225. But the policies that are happening in the U.S. right now, and the way that we are, the Fed is potentially the global central bank, as many things are priced in U.S. dollars. And we've seen the actions from the Fed the last 2 years be followed by almost every central bank. 2018, the U.S. was raising rates. What other banks started to do it? Most central banks were trying or talking about raising rates. 2019, the U.S. Central Bank is cutting rates. What do other central banks do? Cut rates. What are we doing this year? The Fed makes emergency cuts to near 0%. What other banks do? The same thing. So it's just interesting to see. This is not guaranteeing that the U.S. market goes up. And whether we go sideways for the next 1 year, 2 years, that is something we have to be prepared for. So are we prepared for the S&P 500 to do nothing? Are we prepared to not regain these highs? Are we prepared for the next 12 to 24 months to not break this high, potentially not break this low, and deal with this? What is this environment for you as a trader? Okay, so I know I'm asking a lot of rhetorical questions here, but there are environments in which we need to figure out how to trade. All right, and so I will do my best to be prepared for this environment. I'll do my best to be prepared for this environment, and I'll be prepared for this environment or this environment. Okay, we don't know what the market's going to do with an absolute certainty, but we can be prepared. So for right now, for this week and this week's outlook, I'm prepared for more uncertainty, more indecision, more lack of volume, lower volatility. I'm prepared for that. I'm prepared to wait to buy stocks. I'm enjoying the fact that we actually have a cryptocurrency rally, which is exciting. We're up to $10,000 on Bitcoin. We took a big nosedive there. I'm curious if 10,000 is a round number to see some profit taking. But I've been talking about this with my trading room for the last probably 6 months. I'm wondering if we have this forming. From this swing back in 2017 to this low, is this setting up, the A, B, and we're trying to form the C? Inside of this, we have another swing, A to B, and we're trying to form the C. And what I'm looking for is a bullish pattern. So will we see a head and shoulders with a neckline where we need to see price break above this 10,000 handle? And if so, it has room to run back into 20,000. Will we end up scoring a point where we have a left tip, center tip, and then we have a pullback here, and we start to get the rally? But the big, you can see that 10,000 is clearly a really big hurdle right now in Bitcoin. I think if the bulls can close above 10,000, then we have a really nice continuation up towards 2017 levels. So cryptocurrencies have been getting some love. Meanwhile, we have our currencies, and take a look at these for the day. Again, dollar getting stronger from last week. Japanese yen getting weaker. So my Japanese yen pairs are short term now. My Aussie yen, I'm looking at selling nice and high. I'm prepared for this on the yen pairs. Aussie yen, be prepared for this range. We might have a new range on the Aussie yen. We had a range play out here. We had ranges play out for the last couple of years, for most of the year. And then we have, 1 to 3 months of trending. So with today's indecision candle, I'm looking for resistance around 70. Let's see if we can fall back down towards 67.50. Now this might be range bound on the Aussie yen, which in the short term, we can take some pips. 70 down to 67.50 is 250 pips. We can certainly find ways to trade that on smaller time frames. I am in a really good looking trade right now on the Aussie CAD. This was a rising wedge. We took a short on this last week in the trade room. We took about 60 pips of profit right here, and then we sold it at the highs at 9,100. We're looking for this to at least get back down towards 9,000. That would be an easy and very conservative target one. We should be falling into some equal space and a nice little daily pocket inefficiency around 8,800. So I'm going to try to hold this, sell at 9,100 down towards at least 8,850, going into ideally target 8,800. That should be a nice, 200 to 300 pip gain we can grab on the Aussie CAD. The Aussie Swiss, I'm looking for Aussie Swiss to again have some pretty heavy resistance, not too much higher. Again, some indecision is pretty visible. We are not breaking this high yet, but we have lows, highs, higher low, and we're not quite there yet. So we may drift a little bit higher. But what I'm looking for is if we drift a little bit higher, major resistance up here. If anybody's still holding bullish, you're holding on for that last little puff on the Aussie Swiss to the upside around 64 to 6,500. I think from there, any bullishness is going to be met with divergence and possibly overbought conditions, and from there we end up dropping. So I think an Aussie yen sell is coming. I think that the Aussie Swiss is coming, the Aussie dollar, the Aussie CAD. I think the Aussie in general looks pretty promising for some weakness in the near term. Let's see here, Aussie New Zealand. I hope the Aussie New Zealand can find a way to drop a little bit. If we can come back into 10500 or lower, at least coming back into this level. So this would be a drift back into 105. I'm interested in buying at 105 and 104 and 103 for the longer term. But I think in the near term, we should be capped for some resistance around 107.50 or up to around 108.50. So sell levels there in the near term, but buy levels at 105, 104, and 103 on that Aussie New Zealand. Aussie dollar. This one, like I said, I expected some weakness to come in. We have major past support and resistance. Past support's around 66.50. We may get there, but we also might start breaking this rising wedge. This could go sideways. This could start breaking this channel, breaking this rising wedge. From there, I would look to short the Aussie dollar back down into 62.50 or potentially lower. CAD Swiss, I'm going to hold on to this one a little bit longer. We are just shy of the highs at 70.30, but we're holding up above this neckline at 68.90 or just around 6,900. So I'm still holding CAD Swiss long, trying to get into 7,100 or higher. CAD Yen, I'm looking for some better resistance. So this played out like we expected. I was telling traders, don't get suckered into that sell trade. All right, we can possibly look at a sell trade at 77 or back to these equal highs around 7,800. So we could look for some near-term resistance or possibly slightly higher equal highs around 7,800 for some resistance as well. Look left on your chart on the CAD Yen. Past support becomes future resistance, which is around 79 to 80. That's also a very nice round number resistance. Short-term confirmation. We can get some really nice sell trades lined up off of that one. All right. Let's see here. Swiss Yen, we'll leave that one alone. Euro Aussie, this is short-term scalping for right now. Euro CAD, leave it alone because we're taking CAD Swiss. Euro Swiss, it's going to be one of my favorite trades eventually. We just need this stupid currency pair to get above this blue line. Once we get above this blue line, which right now price needs to get kind of safely above 106. I think if you're just setting some chart alarms, a price closing above 106 looks pretty good to the upside towards 108. So, you know, if we're doing anything right now in the Euro Swiss, it's waiting. If we get above 106, then we're looking for that confirmation to take us into past support, which is 108, and that's 200 pips of pretty solid direction. Euro Pound, leave it alone. Euro Yen, if we're not holding below 116, I'm less interested. So my trade did get stopped out. I had a RIGHTtrader Max system running. It did get stopped out for a small loss. What I'm doing right now is I'm waiting. So I'm looking for this to confirm at least on the 1 hour chart and then start trading again on the 15-minute chart, but I will let the robot take some sell trades. I told traders for the last 2 weeks with this system, if I take a loss now because it doesn't cooperate, that's fine. But if my prediction is going to work, if my prediction for over 4,000 pips, technically sound and I think fundamentally valid, if we get, you know, any, let's say we get half of this move. I mean, there's no reason for this to go halfway, but the Japanese yen can be wild and crazy and mood and sentiment based. But this is a good technical setup. These are all good technical setups. The one thing I can't control is the timing. So if we're dealing with choppiness right now or the Japanese yen is not cooperating, that's fine. But I'll go down to a smaller time frame. I have a great system in RIGHTtrader with smaller time frames that we can trade and not have the big swing stop losses, but rather we can take some little itty-bitty movements and we can capitalize on selling it, confirming it, and then taking a chunk of that profit. Buying it, confirming it, taking a chunk of that profit. Selling it, confirming it. Or what I would like to do is switch it to sell only. Not get stuck going both directions, but have a directional bias. I think the stronger move will be to the downside, and it's just a matter of time. So right now, keep the trades small, and I'm going to let my system do the work for me. I know that if it does the heavy lifting, it should be right. And if I take small losses in the interim, fine, but I'll make them up. And, you know, that way I'm not trying to chase and react to when it finally does start to move. I'll already be in the trade. So that's the yen pairs. Euro yen, pound yen, dollar yen are very similar to that. What other pairs? Euro dollar. Anything exciting on euro dollar? Are we above 110 or below 108? No, we are not. But this pair has to go somewhere else soon. We're not breaking below 108. We're not getting above 110. This pair should be making a move somewhere. If we break below 108, pretty interested in selling this down to 105. If we break above 110, really interested in buying this to 115. You know, price has been there before, but you notice here that the daily candles are not closing outside of that 200 pip range. So right now, what's the trade? Right now, I have a range system trading that. My range system, I have a perfect storm strategy. It's called the active storm or the range storm, and both of which are looking at structure and horizontal support resistance to buy and sell from. It's been a nice, consistent, reliable strategy to trade range-bound conditions, and then eventually this pair will go somewhere else. But for right now, we've had essentially 2 years of this currency pair doing this, and then you have the roller coaster ride from March on the dollar, and now we're stuck between a 200 pip range. So until this range breaks, I'm going to take some pips every 30 to 50 pips. That's my active storm. It's working out so far. Same thing with my New Zealand CAD. I was able to throw together an extra 120 pips last week on New Zealand CAD. I know this one made an extra 60 pips last week for the euro dollar. So, if the range conditions are there, then I'm going to enjoy them. Pound crosses, pound Aussie. Pound Aussie back down to equal lows. So we have the support level becoming resistance. So we had the short-term run where we had the break. Traders were short with me down here. We missed the buy opportunity because it was so fast. We literally had 2 days. It recovered about 500 pips. The system that we had it deployed on was RIGHTtrader Max, and we had a 15-minute time frame, which you would think was enough to get us in a buy trade, but it was so aggressive, it literally did not pull back for 48 hours. We never had a sideways move. We never even had a bull flag. It just drifted higher for 2 days. So we didn't get a chance to get filled on that buy trade, but we did turn around and short it. So our pound Aussie short worked out quite nicely back down to previous lows. But right now, I think this is probably going to be range bound. Keep in mind, as we head into the middle of May, head into summer, if we're going to see price action sideways, be prepared for June and July ranges. So we may be setting up the pound Aussie this way. If we're looking at equal lows, potential level to buy from there in the near term, look for this support to become resistance, and then we have a range heading into the next couple of months. So there's a lot of pairs we'll be discussing this week in the trading room that will be range bound. So we're going to start identifying those major swings and those highs and lows and expecting price to stay confined within them. Pound CAD, same thing. We're still range bound on the pound CAD. And this might be the summer. We might look at pound CAD summer trading right there. Okay, which is not bad. If we have that structure from highs around 77 to lows around 72, there's plenty of pips. We can buy low and sell high with trending systems on smaller time frames, or we can set it up with a range system to buy support and sell resistance. Your preference. But if we're going to stay within the 600 pip range, there's plenty of opportunity up for grabs on that pound CAD. Pound Swiss also playing the range from 21.50 down to 19.50. About a 200 pip range. Selling high, buying low for right now. Okay, pound yen. Pound yen, as long as we stay below 132, I think this is a valid crown that should be heading lower. I'm looking at this one to at least come down into 127, 128, but ideally trying to get this into previous lows in March at 124. If it's noisy, then that's out of my control. If this is noisy here and it's range bound, then fine. I will surround this structure and I'll look for a nice clean breakout to sell more aggressively. If we have a buy trade, I'm cautiously bullish. I'd be scalping, but very aggressive to move my stops, eliminate risk. We may come all the way back up here into 140 or 141. I don't think that's the case right now. I think right now we figure out if we can get back below 132, then we start sliding into these lows and everything looks good for us to sell. Look for 1 hour alignments, 30-minute alignments, 15-minute alignments to sell the pound yen, as long as price cooperates. That's what I'm looking for. But again, confirmation is important. Pound New Zealand, some more range-bound conditions. Lows around 2.01, highs around 210. That's a large range, and this could be a great summer trade. Look for lows around 201, highs around 210. Buy low, sell high. You can trend trade that. You can range trade that. If that's where structure is sitting and bouncing from, then let's take advantage of it. Pound dollar. We made some good profits on pound dollar last week. We closed out for almost 300 pips, getting back to these lows around 22.50. I'm still looking for a push lower. We're struggling to break below 22. Again, we might be sideways for right now between 22.50 support and around 26.50 resistance. But if we break and go lower, I'm at least looking at 1.20. I think that we break below 22.50, we head into 120. That's a pretty fair round number on the pound US dollar. But from 120 could also be a major bouncing point. So I would be protecting those profits into 120, trailing stop losses in case it does ignite more to the downside. If that momentum continues, then sure, let's take it down to March lows. But I think 120 is a big round number. Let's make sure we're trapping those profits or at least eliminating all risk. New Zealand CAD. New Zealand CAD has been working out great with just some sell trades and buy trades. Here's what I have here. This is part of my perfect storm strategy, and it is Selling the highs, taking profit. Selling the high, taking profit. Selling the high, taking profit. Buying the lows, taking profit. So all these levels right here, this is a buy for 30 pips, buy for 30 pips, buy for 30 pips. That's a sell, that's a sell, that's a sell, all for 30 pips. So 30, 60, 90, 120, 150, 180. Not bad. Not bad for a couple of weeks of currency pairs that are doing nothing but having systems that are able to take advantage of that. So that's one of several. But New Zealand CAD's working out pretty nicely, just grabbing some scalpy pips, all right, and some choppy pips. But I'll take it. Keep adding that up. New Zealand Swiss, we are drifting on the right-hand side of this trend line. I'm looking for a case for this to go sideways enough to continue up towards 6,200. Again, the drift that we're seeing in the stock market, the indecisive low-volume drift in the stock market might be the indecisive low-volume drift in the currency world, back to potentially 6,200. So unless we see a very aggressive close below 5,750 or 5,800, then this would be coming back down into these March lows. But if we just start moving further on the right-hand side of this trend line, then we creep up towards 62. And I am long from these levels in March, and I'm trying to get back to 6,200 on that New Zealand Swiss. Okay, New Zealand Yen. New Zealand Yen, it didn't give us a nice strong daily close below 63.80, so we didn't sell it. We're waiting. We are looking, and we are interested in looking for short-term confirmation, previous support, becoming resistance, looking to sell. Highs around 6,600, 6,650, major resistance at the round number at 67. So do we have a chance to get the 1 hour, 30-minute, 15-minute lined up to sell up here? Possibly. That's what we're looking for this week on the New Zealand Yen. New Zealand US dollar. New Zealand US dollar, can we get to 6,200? Can we get above 6,200? This one looks very similar to the Aussie US dollar. If we break back down here, New Zealand dollar is probably dropping back to March levels. If we get above 62, then we have room for a pretty robust recovery on the New Zealand. And again, this one might not be all New Zealand, but this one be mostly US dollar. If the dollar gets weaker, the Aussie and the New Zealand will tend to get very strong in that environment. So if the dollar takes a nosedive for whatever reason, potentially this week, where's price have to close? The New Zealand US dollar has to close above 62 and stay there. Otherwise, that is major resistance, and I talked about this last week in class. Major resistance, if we have confirmation, then we look to sell that in the near term. But if we get above here, I'm a buyer above 6,200. Dollar CAD, range bound. 42.50 highs, 38.50 lows. Again, watch these levels. I'm buying low, I'm selling high. We took some profit on the dollar CAD. We did make some new highs on the near-term charts, but I went ahead and closed it for a really small loss. Here's the end result. If I go down to, say, a 1 hour chart. Oops. Let's go to the 1 hour chart. We were long in here. So we did not get our chance to short it up here. We wanted to short at equal highs. It didn't fill us, but traders were selling these trendline breaks and bear flags all the way down towards lows, so made some money there. We did get a nice group trade in to buy it. We took some profit there, bought it again. We had a chance to protect some profit. I thought we were going to drift a little bit higher. I thought we'd get to 4,200, 4,220. So what happened was we were in profit on a couple of positions. It ended up coming back into break even slightly. I ended up closing it right here. I closed for a small loss when it took out those lows. So I think I closed out for minus like 30 or 40 pips. But we also made like 150 pips right there. Traders made like 300 pips right there. So to take a little loss because it didn't quite cooperate, so be it. But watch the lows, watch the highs. That's the range right now on the dollar CAD. Dollar Swiss. Interested in long-term buying only. Trying to buy this one at 95.50 and 92.50. Those are long-term positions. Wondering if we're going to get a chance to buy low and then run this back up into a nice little pocket and parity resistance at 1.00. That is a kind of ideal buy trade. If we get at 95.50 and 92.50, awesome. I'll buy it, hold it. I don't mind that dollar Swiss at all, but I'm not a seller on that one. Dollar yen, we're currently, strongly back above 10700. You punk. Why are you doing this? Why is it at 107.50? Because it's a turd. So what do we need to see? Well, we need to see a complete rejection of this candle. We need to see a complete rejection by the end of the week. Otherwise, we're making a divergent low, which is possibly what this was right in here. Let me use a different line. So if we have low in price, equal lows in momentum, or maybe even that slight angled divergence, That may be why we're back above 107. So what do we see? What do I see us doing? Possibly drifting back up above 107 and staying bullish back up into these highs around 109. Okay, but with other yen pairs, short-term confirmation. So am I a buyer right now and switching gears and reversing positions? No, I'm waiting, right? If we come back to these highs and then start to sell back off, then I'm going to have a 1 hour, 30-minute chart, 15-minute chart confirming once again to sell. Okay, but I'm not going to sit here and hold on to yen pairs. If they're not working, they're going to get stopped out for small losses, and that's fine. Like I said, I hate losing, but I would rather take losses on yen pairs and go focus on something else that's going to pay us a lot more. And then eventually the yens will cooperate and we'll get some big wins on those yens when it's time. Right? Cryptos are going to have an interesting week. I hope to see the bullishness continue. Stock-wise, let's talk about some stocks. So positions I've been somewhat interested in, watch lists that I've been interested in. I am watching... let's see, we've talked about this in some of our YouTube sessions and Facebook sessions. I'm looking at some corporate real estate companies like Regency. I'm looking at Wells Fargo, Bank of America. I'm looking at Berkshire Hathaway. I'm looking at Brown Forman. I'm looking at Molson Coors. I'm looking at Morgan Stanley. Look, like I said, the easy way for me to trade and kind of think about stocks, I mean, honestly, stocks, okay, great. You're having to pick and choose, like, what's the best financials? What are the best metrics to use on stocks? Honestly, I'm going to buy the friggin' SPY. I mean, if the SPY is down into March lows or lower, one of the easiest plays I can buy is the SPY and just want to see if we get to these highs in the next 5 to 10 years. So the SPY is an exchange-traded fund. I'm also going to be buying some Vanguard index funds. This one is VOO. This is pretty much in lockstep with the S&P 500. So same thing. If the stock market drops, or the S&P 500 drops, then Vanguard gets into, roughly $200 or lower. Would I buy it at 200? Yep. Would I buy it off of these lows, possibly at 180? Yep. If we don't recapture these highs, so be it. But if I bought it at 180 and it finds a way to go back to 270, 280, fine. I'll make 20, 25%, 30% on my investment. So there are definitely ways to play this near term, but or long term rather. But I think in the near term, I just can't justify buying 11-year highs. The Fed and central banks throwing the kitchen sink at it. I get it right now. This is like near term stimulus, but this doesn't end well. So I don't know. Maybe I'm too early to the doom and gloom. Maybe I'm too early in thinking that we just don't have this because there are the mechanisms now to keep this propped up. But I still think we're going to have a heck of a time breaking those highs. So I feel like it's easier for the market to do this. Stay sideways and be very indecisive for right now. But before we take out the highs, I would think that the reality is the market's going to want to try and attempt to at least get back down to these lows. Now, I am a value investor when it comes to those lows. I'm not an eager throw money at this market and just think like, well, it's got to go up, right? Because the Fed and the central bank and blah. That's not why I'm buying. Okay, I want to buy at good prices. I want to buy at prices that haven't been offered in literally, 2, 3, 4 years. So that's what I'm willing to wait for. So I'll actively trade currencies and I'll, set up my portfolio to be active in currencies and diversified in currencies, because if you have risk on, risk off, or no movement, fortunately I have systems and strategies to take advantage of that. If we have no movement and ranges, I'll take profits. Okay, I have range systems to be profitable and just scoop up some of those lows and highs and take little tiny profit targets. I have trend systems that as we head into the end of May, hopefully see some short-term trends, and we'll start lining up those bigger ranges to buy low and sell high, but do so on a smaller time frame so we can get a trend. So we have ways to be active and be profitable with whatever the conditions are given us. But be prepared to be patient. Be prepared to be poised for whatever comes our way. And I'd say the most important thing you can do for yourself is keep the trade sizes nice and small, keep the risk nice and small, and then let price kind of prove and confirm that now it's going to go somewhere. And, maybe it's not now. Maybe it's not this week. Maybe this is another slow week. Fine. So we'll weather the storm. We'll figure it out. But there's no better place to trade than in a trading room. There's no better way to do it than with a community of traders that are all trying to do the same thing, and that is make profits. So that's going to do it for this week, traders. Let's have a great week. Again, just a short recap. We have active positions on Aussie CAD. I'm looking for some Aussie movement this week. My Euro Swiss. We're going to watch those yen pairs very carefully. We've got some range-bound systems running on Euro Dollar, New Zealand CAD, And whatever else pops up, we'll take it. I'm looking for CAD Swiss to also continue to cooperate, hopefully back up towards 7,100. So we'll be watching stocks, Forex, cryptos this week. If you're looking for me on social media, you can find me on Instagram, Twitter, Facebook, and YouTube. The best way to get videos like this and more is to subscribe to my YouTube channel, like this video, share this video, and I want to give everyone a big shout out and a big thanks for helping my channel grow. Last week, we added 231 subscribers. We had over 100,000 minutes watched. So we had over 7,600 views. And so it's an active community just on my YouTube channel. We have an active trading room, of course. So keep those likes coming in. And I appreciate everyone taking these videos and more and sharing these out to your friends and peers and anyone else that you think could benefit from free education and solid, proven strategies. Support, resistance, trend lines, price action. That's really all it is. Good trading does not have to be complicated. It has to be consistent. You have to have a routine. You have to have a process. And I'm a big believer in saying this and doing this. The process takes care of the profits. All right, so that being said, traders, let's have a great week, and I'll see you in the markets. Bye-bye.